Hey everyone, it's Paul, and I just want to start off by saying today's video, well, it's not rocket surgery. All right, back to business. Today's video, number one self-driving stock. All right, before I get going, disclaimer, not investment advice. Past performance doesn't guarantee future results. If you choose to do anything with the information, engagement, opinion, entertainment that you see on this channel, it's on you. It's your money. It's your responsibility. Buy, sell, win, lose, gain, loss on you. All right. Now, I said it was my number one self-driving stock, but I have a confession. Well, Tesla is still really, the number one self-driving stock. However, among like smaller stocks, this is the one that I think is going to shock and stun people when they look back 3 or 5 years from now. All right, you may be thinking Rivian, Lucid, one of these companies. Nah, not a car company, not even a software company. So if you're trying to guess, yeah, but don't worry, I'll be telling you what it is. Just give me a few minutes, all right? I mean, it's a small company that came IPO pretty recently. So for all effective purposes, my guess is to the vast majority of investors, this company is like a secret. Right? Nobody's heard of it yet. You're going to see in the next picture that what it makes is in all of these car brands. All right, Dean, put up the picture of all the brands that this company's products are in. All right, there's two ways to characterize small. One is relative to the stock market. And so for that comparison, I have put up two things. One is the market cap of this company. Remember, market cap is stock price multiplied by the number of shares that the company has issued. That's 957 million for this secret small company, my number one self-driving stock. And Tesla, in comparison, is 538 billion. So like, what? 50 times bigger, right? Okay. So in terms of the stock market, while this company is not like, worth 1 million or 2 million, it's worth 957 million, but like it's a fairly small company. Just remember the biggest company, Apple, worth about $2 trillion. So, like what? That's 200 times bigger than this. All right. So that's one way to characterize small. The other way to characterize small is relative to the opportunity that the company is going after. So it's small versus the opportunity for it, which is really in self-driving, autonomy. I'll just throw in EVs, connected car opportunities. And how big is this opportunity, the size of the opportunity? The first number is from a company called Research and Markets. They estimate by 2030 that the self-driving, autonomy, mobility sector will have 62.4 million units. In other words, it might be cars, it might be whatever else we figure out autonomous units. 62.4 million. Statista estimates that by 2030, this will be a $2.2 trillion opportunity. And in 2021, it was 105 billion. So that's like what, 20 times? Like, yeah, I mean, in 2030, hey, it's pretty close. I mean, people may be thinking, well, Paul, I can invest in it 7 years from now. Remember that markets look forward. And as the outcome becomes more and more certain, then that is discounted or priced in. All right, Dean, just so people can see what that Statista forecast looks like graphically, you can see it's essentially a straight line up. What are the keys to self-driving? Well, you got to have software. The software sends instructions to the hardware, and the hardware is not just the car, it's all the little components that go into the car that do the various things. You got to have storage because, of course, it's generating huge, absolutely astonishing amounts of data. You got to take that data and analyze it, understand it to be able to make decisions. And then intelligence, in other words, well, things are constantly changing. The environment is changing. I mean, the nature of our roads are going to change as we have more and more autonomous vehicles. What we can do on the road will change. So we need to take all that data and information and continue to use it for now and for where we are going. All right. McKinsey kind of lays out these things that are necessary for self-driving autonomy opportunity. And when you go through all of that, everything that I said, everything that McKinsey says, there is only one technology that is common to all of these things. Yeah? Only one technology that is common to all these things. Yeah, you probably guessed it. Chips, semiconductor sensors, different words, more or less the same thing. I know some engineers will take issue with that. Hey, I get it. But, in a very general way, I'm about approximately right. All right. Now, in my judgment, and remember, this channel, my opinion, not investment advice, just repeating that, one chip company is exclusively focused on this $2.2 trillion opportunity that is rapidly approaching as 2030 comes. I know you're thinking, I already know this, Paul. You're not stumping us. Not Mobileye. I got you. I know. You guys were thinking Mobileye. It's not Wolfspeed, which, is actually a pretty good bet, but that's more like on the power side, yeah, for EVs. It's not Nvidia. I know a lot of people would have guessed that. It's not Intel, and it's not our old friend AMD or ST Microelectronics. All right, big reveal moment. Are you ready? We should have a little countdown clock. Ta-da! It's Indie Semiconductor. You're like, Indie who? Yeah, Indie Semiconductor. Ticker symbol INDI, market capitalization $957 million, stock price between 7 and 8. We're going to go with 7 because that's what I wrote in all the other slides, so I had to correct it. Some little bit of backstory, price history. Indie Semiconductor comes public IPO in June of 21 through a SPAC process at about $12. Goes up to what, $16 by November of that year. Since then, of course, SPAC market crash, growth market crash, gotten crushed. But relative to other stocks, it's kind of held up. Why? Because it is so laser focused on this self-driving opportunity. And also, you'll see in the next slide, they've had enormous growth. So they currently sit at about $7 a share. The recent 52-week high was about $9. And very quickly, this is the revenue comparison, right? Which is that at the 52-week high, its revenue was $31.5 million TTM. This is an abbreviation that means trailing 12 months. In other words, looking back 1 year, TTM. And then look at this right now. It's almost 3 times at $96.7 million. In other words, this company has grown while its stock price has gone the other way. All right. In its last quarter, and it is about to report in a week or two, but so this is the latest quarter, which goes back to November of 2022. Sales grew 147% year over year. In other words, compared to the September 30, 2021 quarter, their sales grew 147%. But because this is a chip company, one thing that matters for them is something called sequential sales. In other words, people that are investors in chip companies care about what the previous quarter did. In other words, the June 30, 2022 quarter compared to the September 30, 2022. Repeat that. So people that invest in semiconductor and chip stocks, very unusually, because the vast majority of investors really only care about that year over year number. In other words, comparing it to the previous year's quarter. But chip investors, they care about what happened in the previous quarter. And the reason for that is because a chip company is essentially a very large factory, and the volume that goes through it is critical. And the higher the volume, that goes through it, the higher your gross margin or profitability. And the key to that is that at a certain level, all of the expenses of the factory are paid and everything drops down to the bottom line as profit. And that's when investors want to own these chip companies. So it's really critical to always track this gross margin. Now, Indie Semiconductor in its last quarter said that they had 50.4% gross margin, but we want it to be rising, and they are targeting 60% in 2023 and beyond. They can hit that. Well, my experience is that when you have rising revenue growth and a rising gross margin, you tend to have big rocket ships in chip companies. All right. Well, this is a pretty complicated slide. I can barely follow it. All right. 957 million market cap, $7 stock price is where we are. I always favor this side, so I'm just going to try and favor this side. All right. At the previous all-time high, I have to step aside to do that. $16 previous all-time high, which was a $1.5 billion market cap. All right. So currently, the forecast is for 2023 is for Indie Semiconductor to generate $222 million in sales. And it currently trades for about 11 times sales. So if you do that multiple, that math, you would get to 2.4 billion and a $26 stock price, which from $7 is 271%. But that's just, for the near term. Looking out even further, being that the size of the opportunity that we're talking about, 2.2 trillion, the length of it, which is, 2030, I mean, it's likely that, that's just, one of the levels that it hits. In other words, you go out to 2024 and 2025, for which I couldn't find forecasts at the present, you're going to get to a much higher revenue number and in all likelihood, an even higher price to sales multiple. So the upside, longer term, could be 300, 400, 500%. But nonetheless, I just want to lay out my logic for you as to why I believe Indie Semiconductor can go up. All right, summing it all up together. Today's video, number one self-driving stock, Indie Semiconductor, pursuing a $2.2 trillion opportunity, $7 stock, $957 million market capitalization, potential upside based on current forecasts at $26, which is a $2.4 billion market cap, 271%, something like that, upside. All right, so here comes the sales pitch. If you like growth companies, if you like analysis like this, that's forward-looking, that's future-looking, that's bullish, that's optimistic, that's positive, well, check into ATG Digital. Oh, Paul, speak it out. atgdigital.media. That's my company. We sell subscriptions which start at $9. There'll be a link below in the description. If you want to read some more about companies like Indie Semiconductor and other industries that have an incredible, astonishing, phenomenal future, like in self-driving cars, you can also read my Substack. We profile companies like this every single day. And if none of that is appealing to you, well, hey, give us a thumbs up, subscribe to the channel, and come back again next week. This is Paul saying bye.